The bearish island reversal we had a couple of days ago is still in play, but the market is real quiet right now. We're going to take a look at where we see is buying opportunities coming up, so stay tuned. We start right now. The stock market volume trading is getting real slow right now. We're getting into summer trading. We're going to take a look at this bearish island reversal we just talked about. We're also going to look at some of our sectors and where opportunities are in sectors, and also some of the news that's driving the markets. Let's get started here right now with the S&P 500 daily chart. This is our island here that was created by this gap up and then a gap down. We had about a 5% day to the downside. It looked like this was going to crash below and at least test some of these lower levels here, but buyers have come in since and saved the day. The island reversal is still intact. However, there's been some attempts to move in here and fill this gap, but so far it hasn't happened. You can see our volume here as we move into summer trading. It's very likely we may not get into some heavy trading until we get past the July 4th holiday. We could be starting to really slow down here. Typically when the market is slow, we don't get as much fluctuation in the markets. Typically, if we're going sideways, quiet market, that's more bullish than bearish. Let's take a look here at the trend indicator here on the S&P 500. Trend indicator is still pointing up despite we had this gap down with the bearish island reversal. Let's take a look at some of our sectors here. We're going to just go through here and look real quickly. Gold, we've talked about that the other day, still in this rectangular chart formation, going sideways here. No breakout and no drop to the low side yet. Let's go down to GDX, leaning a little bit to the downside, waiting for some type of an upside move. Right now it's not there yet. TLT bonds, pretty much going flat. Did try to go lower in the bonds. That was raising the interest rates, but since we're pretty much flat on the bonds. HYG, high yield grade bonds. Typically when the high yield grade bonds are moving up, that's positive for the markets. This is the USO oil fund. Again, oil's in a continuation of the up move off the lows. And then down here is the biotech fund, pretty much going sideways. Had a nice move up off the lows, and then since biotechs have slowed down. We're looking at the real estate sector fund here right now. Had nice charge up higher, than since it's slowed down. So no opportunity in that area. So we're looking at some of these sectors here and just getting a quick big picture of what's going on. Home builders continues to move higher, especially with this coronavirus. New home building and outside areas of cities seems to be popular here. XLV healthcare, again sideways. Had the nice push. There was a lot of talk of various drugs that were going to be helpful. Since then, it's pretty much slowed down. XLU utilities, not going anywhere. So far, everything is pretty flat here. IYT transportation surged higher, and since we're waiting for new action on this. And then the semiconductors. Now, semiconductors are still positive here. Still moving up. That's good news for the economy. We're looking now at the XLK technology sector, and as everyone knows, technology continues to move higher. That's strong. Technology strong. XLF financials have been on the weak side, peaked out, and since then have moved lower, but they are holding some support areas right now. XLE oil off the highs, pretty much going flat here now. EEM, emerging markets, positive, but pretty much going flat. So almost everything we see is flat except technology area. XLC communication sector, Facebook is the leading and the heaviest weighted stock in this sector, and this is still positive. So pretty much everything in tech. QQQ again to the upside. So as we said, markets are real quiet here. The volume is tailing off. We got options expiration coming up on tomorrow. We'll see if that ignites a fire in the markets. But since this big down day, there's really not much been happening. Oscillating here back and forth. Let's look at the AII Bullish Bearish survey here. Bullish 24%. Normally the average is 38. So this is a very low number for bulls. Matter of fact, just recently this past week, it went down 9%. So we have a lot of folks who are not bullish in this case. Too many people are bearish. That's actually positive for the markets. Down here, 47.8% bearish. That increased 9.7%. Normally it's 30.5, almost 17% above where it normally hangs out at. There's a lot of bears out there that continues to push this market higher. Looking at that chart, I would definitely say we're more bullish at this point, although a lot of people are expecting the market to come down. Let's look at what's going on with the virus here. California, Arizona, Florida report record spikes. Daily new coronavirus cases in Arizona is increasing. Daily new coronavirus cases in Florida increasing. Daily new coronavirus cases in California increasing. One of the reasons we had that big down day a few days ago was they started to report the coronavirus was increasing. Of course, we can see here another report that it's increasing, but we had no market fluctuation from that. Partly, we got options expiration coming up, so they want to hold the market up. We're expecting options expiration to end with the S&P 500 ending higher. So it may take a few days next week if there's going to be any type of selling due to this coronavirus increasing. Interesting enough, all of those states are in the sunny states. And they were saying a few months back that coronavirus doesn't react well in hot areas and sunny areas, but it's definitely taking off in our most sunny areas. So we're starting to make up some of the ground, but the real key coming up is going to be those earnings reports coming up in July. Are they going to be able to hold up? That will be the big news coming up. Thanks for watching. Leave a comment if you have anything to comment about